Welcome to Simply Ideal HQ. On this podcast, we engage thought leaders on topical issues around law and business in the most simplistic manner.
Good day and welcome to the maiden edition of Simply by Ideal HQ. Today we are going to be talking cryptocurrencies and the Nigerian financial markets. We will be talking around currency, trade, and regulation. And my guest is a very accomplished young Nigerian, Michael Ugo. Michael is the CEO of Freeme Digital, marketing and distribution company that is home to the largest digital production studio in Nigeria. He is also the pioneer GM of Sony Music West Africa. He is a venture capital investor and he is heavily invested in the cryptocurrencies market. Thank you so much for making the time to join me today on Simply, Michael.
Yes, my pleasure.
Thank you so much. So without much ado, we're just going to dive right into it. So today we're going to be talking on cryptocurrencies and the Nigerian market. So, Michael, there's been so much going on in the last few months around the cryptos market, especially in Nigeria. In February, to be precise, cryptocurrencies became one of the biggest trends on social media. And at some point, it was the most searched word on Google, especially from this part of the world. Mainstream media also recorded astronomical growth in cryptocurrency adoption in Africa, with Nigeria recording over $400 million in trade in 2020 alone. I mean, this means that there is definitely something worth talking there. So my first question will be, for people like me, Michael, who are late adopters or that don't even understand, the cryptocurrencies market at all, what are cryptocurrencies in simple terms, and why are they critical to today's digital economy?
So I guess trying to be as simple as possible, cryptocurrencies are basically digital or virtual currencies, right? Secured by cryptography. It's, many cryptocurrencies are decentralized networks based on a new technology called the blockchain technology. It's been around maybe about 10 years. And the blockchain is just basically a distributed ledger, right? That's enforced by computers across the world, across the globe, or what have you. And I think one of the defining features of cryptocurrencies is that there's generally no central authority like a fiat currency. So with a fiat currency, you have a central bank, that issues the naira, that monitors and maintains the naira, that increases and decreases circulation. Cryptocurrencies generally don't have centralized authority. They are basically decentralized networks. And I guess this makes them quite secure and quite immune to manipulation, just because there's so many players involved in them. So so just think of virtual currencies. It's basically for the online world. And I think one of the reasons why they're so prolific today is that traditional cash, traditional fiat, wasn't developed for a digital world. It wasn't built for the internet. I think the internet has literally, it's changed the way we exist. It's changed the way we do business. And fiat currencies or traditional currencies were developed long before the internet came into existence. So we've kind of just had these two things running alongside each other because, a lot of commerce happens in the digital economy, right? And we're using traditional finance to, settle and pay and transact with one another. But, I think one of the drivers of cryptocurrencies is that these are currencies, commodities, securities, or currencies that are built for a digital world. They're built for the internet.
Absolutely. So I mean, from what you said, it's interesting that you have said that, a lot of the things that are driving, adoption will be the fact that it is more amenable to, today's digital world. And that raises a question for me. Do you think that adoption is polarized across generations, or do you think that there is adoption across, different ages?
I think that, initially, definitely there was that polarization, across ages. A lot of older, citizens may not have been used to the internet even till today. And I think, I have kids. You know, a lot of people probably listening have kids, and there's technologies that they're able to adopt much faster than we can as adults,
Absolutely.
just because of the fact that they're born into it. Like kids have been born into a touchscreen world. When I was growing up, mobile phones had keypads and buttons, but my kids can navigate iPads like there's no tomorrow, right? So I think that there has been, there initially was a polarization where young people, you know, Bitcoin and cryptocurrencies made a lot more sense to young people. But I think that, you know, as time has gone on, people have understood that, look, it's about money. Bitcoin is a money network. You know, it's a monetary network, and money involves everybody. Everybody saves, everybody spends, everybody's affected by inflation, everybody's affected by, you know, currency devaluation,
You
everybody's
can say
affected by
it
everything that affects money, right? So, so as time has gone on and Bitcoin has become more mainstream and crypto has become more mainstream, there's been, you know, a lot of changes in that view. So I think there's much less polarization. To you know, as an example, to me, Bitcoin is an inflation hedge asset, right? Historically, gold was an inflation hedge asset. So if you explain gold to an older person, they'll get it entirely. They understand what gold is for. They understand what to do with gold. They understand, okay, fine, this is how I protect my wealth, right? It's a wealth preserver. Um, but Bitcoin to me is gold 2.0, right? It's better than gold, it's faster than gold, it's newer than gold, it's way more impactful than gold. So I think once, you know, an older generation is able to wrap their heads around that, then it reduces the polarization. But it's not easy because gold has a 5,000-year history, and Bitcoin and cryptocurrencies only has a 10-year history.
10 years.
Right. So yeah, that you know, initially there was polarization. There still is a level of polarization, but whilst I've been in the space, I've definitely seen the lines get a lot more blurred as it goes mainstream and as people start to understand the power of cryptocurrencies and Bitcoin.
Okay, interesting. Very interesting perspective there. So let's talk about the central banks because they are like, you know, the big players holding the stick in the market, right? So generally, I believe that central banks are polarized across two divides in this market. We have one divide that have positioned as the antagonists, who have either taken the position to ban or to take a public stand against cryptocurrencies. In some cases, they have dissuaded their citizens from dealing in cryptocurrencies. Some have actually outrightly banned transactions in cryptocurrencies.
Yeah.
Whilst we have on the other divide some central banks that have, you know, embraced it. Some have even, you know, developed regulations that allows it to exist side by side their fiat currencies,
Correct.
and in some cases developed frameworks to make the market more efficient. I mean, we have a country like China. I mean, this is one very funny, you know, example for me. You know, China has banned, you know, trade in other cryptocurrencies within their market, but they are developing their own indigenous, you know, currencies, which tells us that, I mean, there's something there. Can you just help us understand why there is this different position from these regulators as to their view of cryptocurrencies? It's the same concept, but it seems like there's different stories across, you know, these different groups of regulators. What do you think is the reason for this?
Well, I mean, essentially, all governments, you know, and all central banks have varying agendas, right? But ultimately speaking, historically anyway, central banks and generally governments have kind of like had this belief that cryptocurrencies and Bitcoin circumvent capital controls. So, you know, one of the key concerns has been, you know, protecting their fiat currency, controlling their citizens, and maintaining, you know, that centralized monetary system, right? And I think that, you know, it has been apparent in some countries, you know, as you say, some countries have adopted and embraced, cryptocurrencies and Bitcoin, and some have shunned it, right, and banned it. And I think it's just down to governments and central banks, you know, to make that decision. I don't think there's specific reasons, but with China, China is historically, you know, a police state, right? Historically, they like to control their citizens. They like to, you know, have that control in, you know, in the central government and in their central bank. They don't want a decentralized entity where people are allowed to do what they want to do. and they don't want people circumventing, their rules and their regulations. So despite the fact that they have all these rules and they ban Bitcoin, you still see a healthy amount of Bitcoin transacted in China, using peer-to-peer technology. Likewise, in Europe, we have countries like Estonia and Malta that have outrightly embraced cryptocurrencies and Bitcoin because they've seen it as a way to get a competitive advantage in society. They've seen that, on their different countries on different sides of the divide, if there's so much innovation happening in cryptocurrencies, there's a lot of money from private equity and venture capitalists flooding into cryptocurrencies. There's utilization from a market, right? And Bitcoin has grown in market capitalization over the last 10 years. So some countries are like, let's actually embrace this because this could be good for our country. Let's attract the entrepreneurs. Let's attract those investments into our countries. So you're seeing countries like Malta, Estonia, and others who have outright, policies, government policies to attract Bitcoin companies, to attract cryptocurrency entrepreneurs into their countries. And that's obviously for their reasons. They want to catch up, with more developed economies. And then you have, I guess the largest economy in the world, like the US, who are kind of like, in between, right? The US understands innovation. The US understands that, with technology or with having a lead in technology, you can maintain your lead as a global economy or as the world's #1 economy. And so we've seen a stance in the US where initially there was some pessimism with Bitcoin, where the SEC classified Bitcoin more as a commodity than as a currency, right? But we're seeing more and more softening of that stance, where senators are actually openly and outrightly supporting Bitcoin. Large companies are safely investing into Bitcoin. Pension funds, hedge funds, family offices, and the big banks, from JP Morgan to Goldman Sachs, and everyone in between, at some point has written off Bitcoin, but in today's economy has kind of like embraced Bitcoin. And the government stance has helped that. Estonia and Malta are countries and economies that we see embracing cryptocurrencies and Bitcoin openly, right? Now, these are small economies. And because they're small economies are always looking for ways to create competitive advantage in the world, right? Because maybe they're lacking something. The US is a large economy, China is a large economy, India is a large economy. You have smaller economies like Malta and Estonia who have to come up with innovative ways to attract investment, attract FDI, attract entrepreneurs. So we're seeing them actually launch campaigns and develop government policies that actually embrace cryptocurrency companies, embrace Bitcoin as a technology, and actually they attract them into their economies. I believe Estonia have these kind of like e-visas. You're able to actually set up a Bitcoin company or a crypto company remotely from Estonia and get like a residency permit, as long as you're transacting and the business is based and registered in Estonia or what have you. Similar thing with Malta. Binance, one of the largest cryptocurrency exchanges in the world, I believe they're based in Malta, right? They're owned by Chinese, but they're based in Malta because Malta realized that, look, we actually need to attract these innovative new age companies. So you have some economies that are very pro crypto and very pro Bitcoin. And then you have economies like the US, which I believe straddles, two sides of the coin, where no pun intended, but you have, so historically they've been against Bitcoin, but I mean the SEC was early to point out, okay, this is more of a commodity than anything. They're still working on true regulation for Bitcoin and cryptocurrencies, but generally we're seeing a lot of politicians, a lot of the US wealthy citizens come out to support Bitcoin. Brian Brooks, was the former, deputy officer of the, officer of the currency office, the controller of the currency in the US. He used to be a Coinbase employee. Coinbase is one of the biggest crypto exchanges in the world. So we're seeing a lot of the big banks embrace Bitcoin now. JP Morgan, Goldman Sachs, a lot of the big family offices, a lot of the big hedge funds, a lot of the pension funds, and now embracing Bitcoin. And a lot of the big entrepreneurs like Elon Musk, right? We're seeing them embrace Bitcoin more and more as the US government softens its stance towards cryptocurrencies and Bitcoin. So yeah, there's varying approaches across the world. But yeah, I think at the center of it all is control. Governments are afraid of losing control.
Must be. And that takes me to my next question, and I want us to bring it back home a little bit. There was a heavy resistance in February when the Central Bank of Nigeria came up with this regulatory piece saying that all their regulated entities were not to transact or to facilitate trade in any way or form that involved cryptocurrencies. There was a very heavy resistance. And my question to you would be, would you agree if one were to say that the high rate of inflation, volatile currencies, and the poor banking infrastructure across the African continent will be the major enablers of adoption of cryptocurrencies? I know that many people have positioned that after mobile money, cryptocurrencies will be the next big market for foreign investors in Africa. So in spite of the fact that, people would say that we have very low technology and internet penetration, there still seems to be such a huge, drive towards cryptocurrencies, understanding what they are, and even the volume of trade. So would you say that these are some of the things that are inching people closer to cryptocurrency markets and cryptocurrency transactions, even when our government seems to be taking a different stand and a different position on the matter?
Definitely. I mean, 100%, these are enablers, and it's not peculiar to Nigeria. But, in Nigeria, yes, the governments have banned, they've banned the on and off ramp. So the Nigerian government hasn't banned Bitcoin. And I think they're actually softening their stance. But what they have banned are the on and off ramps, and those are the banks, right? They've banned, the on and off ramps, so you can't change fiat to Bitcoin and Bitcoin back to fiat. The banks help you do that. So though that's been banned, there are P2P networks that people use. But regardless of that, that things like currency devaluation, high inflation rates, poor banking infrastructure, 100%, these are enablers. If I'm a saver, why should I be? I work. I'm a productive, individual within a country. Why should I be penalized for saving? And year on, year out, the price of everything goes up. So if I'm saving in a currency that is continuously devalued, right, that it's being ripped apart by inflation, why would I choose to continue to save in that currency if I'm given an option, right? So
Yeah.
at the end of the day, it's gonna happen. I learned about cryptocurrencies because obviously I was being affected by some of these things. A lot of savers in Nigeria or across Africa are affected by this. In Venezuela, in Argentina, savers are affected by inflation, by volatile currencies, right? And then when it comes to something like core banking infrastructure, 100%. So, I've been involved in cryptocurrencies and Bitcoin for some years now. And, last year, decentralized finance, or DeFi as it's called, came to the fore as, I guess a new trend within the cryptocurrency space. And I've lived and done business in Nigeria. And in the 10 years of actually doing business in Nigeria, I've never been given a loan by a Nigerian bank. It's been very difficult. I've banked with several banks. I've approached banks for loans, and I've never been given them. But understanding decentralized finance and being in that space, I'm able to take loans via smart contracts in a crypto-based world, right? Just using Bitcoin as a collateral.
Sorry to cut you, Mike. For the benefit of our listeners, can you just explain what this decentralized financing means? Can you just try to shed a bit light?
So I guess centralized finance is traditional finance. It's banks, they have banks and central banks at the center of centralized finance, right? Traditional finance. With decentralized finance, these are protocols, right, driven by smart contracts, primarily on the Ethereum network. And what happens with these protocols is that, it's based on code. I can just, because Bitcoin is code, right? I can literally tell the smart contract that, hey, I have Bitcoin of this value. I need a loan of this value. The smart contract, the Ethereum smart contract can basically then assess the value of what loan I can get, right? And it creates a marketplace of buyers and sellers. there'll be buyers of loans and sellers of loans, right? So I can go into this market and say, look, I want to use my Bitcoin as a collateral and I want a US dollar denominated loan, right? The smart contract would match me with, someone that's looking
with a lender,
right? Real time. I can get a smart contract based loan in DeFi in about 5 minutes, right? I don't talk to anybody. I don't see anybody. It's all computed. So decentralized finance is literally, it's basically trustless finance. So I'm a party, someone else is a party. There's no intermediary like a bank. It's a smart contract that sits in between the two parties. And once we transact, my Bitcoin goes into the smart contract like in a form of escrow, right?
Yes.
And then I have to repay that loan within 3 months, 6 months, a year, or whatever it is. And once I've repaid that loan, I then receive back my asset, which is Bitcoin.
Bitcoin. Okay.
Right?
Yeah.
So definitely, I mean, with things like that, that enables cryptocurrencies even more. If I'm facing challenges getting a loan from my bank, and I can get a loan in 5 minutes from a decentralized, smart contract, why wouldn't I do more?
It's a no-brainer. It is indeed a no-brainer. So
Exactly.
let me ask you this, right? So the other time when you were talking, you talked about P2P transactions, as a response to the position of our central bank and the fact that the exchanges perhaps are no longer able to operate in efficiently in this market in response to the CBN, the Central Bank of Nigeria directive. So my question will be, how do these trades that are done on a P2P basis, how are they settled? How do you settle them, and does it raise any concern? Does it heighten the risk of these transactions when you're not able to have an independent party settle the trade between two people in the market?
Definitely. So using peer-to-peer networks does introduce a level of risk that is dampened by the exchanges. The exchange works as a centralized party that's able to, create a marketplace for buyers and sellers of cryptocurrencies and fiat. But, regardless of that, if you need to get something done, you get it done, right? And peer-to-peer is the way, we get it done in this environment right now. So I guess with peer-to-peer, the key thing is that, you identify a buyer and a seller, and a lot of peer-to-peer transactions happen in basic groups like WhatsApp, Telegram, Discord. You have all these merchants who set up these groups, and there's a level of trust that is required for peer-to-peer trading. Now there are platforms across the world like local Bitcoins and local cryptos that are peer-to-peer platforms, and then you're seeing platforms like Binance actually develop better peer-to-peer systems since the ban. Binance is a pretty big player within the space. I actually invested in a crypto platform called Coin Profile, and we're currently working on developing our own peer-to-peer system right now, just because that's how people want to transact. And if you create an environment where it's much safer than a WhatsApp group or a Telegram group, and there's a level of transparency, and there's some kind of platform that sits behind it, then it does engender that safety.
Absolutely.
But yeah, peer-to-peer, it's literally just it. Without exchanges or banks, whether they're there or not, you as an individual may want Bitcoin. I may have Naira. I may want to, sell my Naira and get Bitcoin. You may have Bitcoin and want to sell your Naira. And peer-to-peer is just us finding each other. Wherever we find each other, we transact, whether it's Telegram or a peer-to-peer platform like Coin Profile.
Right. So my next question, Michael, at my last check, one Bitcoin trades at about $58,000 or thereabout, whilst the Ethereum is trading for about, I think, about $1,800.
Yeah.
Can you please just help some of us, that are not that knowledgeable or vested in the cryptocurrencies market to understand how would anyone who is not, ultra high net worth, or that is not, within the profile of what you would call high net worth, be able to make investments in this space? How does it work? If I had my $10, am I able to invest in cryptocurrencies, or do I have to, just level up until I'm able to, buy a coin for $58,000 or thereabouts? I mean, how
No,
how how,
no,
how
no,
does things even
no,
work? Tell us.
no. So you'll find that as time progresses, it will become rarer and rarer to even find people that have one coin or 5 coins and what have you. So you can actually break Bitcoin and Ethereum down into smaller fractions, right?
Okay.
And the term for the smallest fraction of a Bitcoin, or Bitcoin broken down, is based on from Bitcoin to Satoshi. So where you have Naira and Kobo, right? In Bitcoin, you have Bitcoin and Satoshis, right? Where you have Naira and Kobo, in Ethereum, you have Ethereum or Ether and Wei, right? Wei is WEI. So those are the smaller units. So you can buy $10 worth of Bitcoin, you can buy $5 worth of Ethereum, right? In one Bitcoin, I believe there are about 100 million Satoshis in one Bitcoin, right? And at the point where, I believe Bitcoin will reach $1 million, right, per Bitcoin, potentially in the future. And at the point where Bitcoin reaches $1 million per Bitcoin, one Satoshi will equal $1, right?
Hmm.
So, and then I think for Ethereum, the number's even higher. So the smallest unit of Ethereum is a Wei, and I think there's something like 1 quintillion Wei in an Ether. So, quintillion is a big
Really?
number. Don't ask me how many zeros are there, but there's a
I'm not
lot.
going to ask you.
No. So it's not the reserve of ultra high net worth individuals at all, right? Anybody can actually be part of the Bitcoin monetary network. I see it as a form of savings. My mom has savings in Bitcoin. My sisters, my brothers, my wife all have savings in Bitcoin today. They're not Dangote or Otedola. They do okay, but they're able to save, from their salaries into Bitcoin. Even my staff. So at Christmas, I tried to get my staff involved more and more in Bitcoin. I talked to them about it, and I awarded all my staff Bitcoin as Christmas bonus. And
Wow.
they've been able to now start their own journey of saving.
Interesting. Right. Let's talk about mining, right? Um, so we understand that this is the process of creating the crypto coins, right? Can you
Yeah.
just explain to us what this concept is like? So we know that in conventional banking with the fiat currency, we know that the central bank, just mints the money,
Yeah.
and there is, some measure of currency control. So who is doing this mining? How does a cryptocurrency come into being? Can I mine? Can you mine? I mean, who owns this the mining fields where these cryptocurrencies are created? And can the people who are mining manipulate the market? How does this work?
So technically, yes, anybody can mine. It's not the preserve of a central bank or a central authority. Technically speaking, anyone can mine. However, over the years, it's got harder to mine. So basically, when you mine Bitcoin, what you're literally doing is solving complex calculations using computers, right? So, in solving these complex calculations, you're able to unlock Bitcoin from the Bitcoin network. That's the reward. The reward is Bitcoin, right? Once you solve these problems and you keep the Bitcoin network secure. So it's literally just math that actually keeps track of, all the transactions on the Bitcoin network. So it's the ledger, and you're just adding to the ledger and adding to the ledger and solving problems and adding to the ledger, right? Bitcoin nowadays is quite capital intensive, because as Bitcoin evolves, the mining rewards reduce and the calculations get harder. So as the calculations get harder, you need more powerful computing technology. Right now, I think the most popular mining, machines are like these ASIC miners. And even if you try and buy an ASIC miner, you may be on a waiting list for a year to get one right now, right? So it's not like yesterday where people can attach their personal computers at home and mine Bitcoin. Because literally, when Bitcoin first started, you can literally mine at home. So now we're seeing much larger companies and corporations become miners of Bitcoin and other cryptocurrencies. So there are other cryptocurrencies that you can probably mine from home, right? I think Ethereum is you can probably still mine from home, possibly. But as the Bitcoin network becomes more secure and grows, it gets harder and harder to actually mine for Bitcoin. So you need money. I mean, these companies are like, worth millions of dollars. They own millions of computers that they put in these massive data centers to literally just hammer away and complete these complex calculations. Now, yes, anybody can create a coin, definitely, and there are a lot of scam coins out there. But I think what makes Bitcoin, obviously the most robust is that it's had the most history. The most complex calculations are being solved on the Bitcoin monetary network. That's what makes it very, very, very secure, right? So yeah, it's decentralized, and that does introduce some risks, especially in this crypto-based world where you can develop a coin, you can create this podcast is simply HP, right? You can design a simply coin if you want to, and and start marketing.
Thinking about that now.
Yeah, I mean, people do. You can. But I guess the key thing is that it's about it's also about understanding how do we actually what is behind this coin. There's over 6,000 cryptocurrencies in existence today. Of those 6,000 cryptocurrencies, Bitcoin probably has about 60% of that market share, right? Ethereum probably another 10 to 20%, and then the other 5,999 or 90 whatever currencies are in the remaining share, right? So we're seeing a lot of coins a lot of projects launch daily, and that's why we do need regulation. So with cryptocurrencies and decentralization, it doesn't stop you or me developing a cryptocurrency that that we feel may solve a problem at home, like in Nigeria, right? But what we need to see, we need regulation in order to make sure that we're actually creating safe environments for people to actually get involved in our projects.
So I'm going to jump right on that statement you just made, and I'm going to ask you, as someone who's as invested as you are in this market, what is the ideal kind of regulation that is needed to instill, confidence in the market? What would you want to see, and is this going to be driven, locally at the country leg, or does it have to be some kind of global measure, or is it going to be driven by the particular, creators of the coin themselves? I mean, just how do you think that this market would evolve from where it is right now in terms of regulation?
So I mean, it's going to be driven in different ways, right? I think that there's going to be ways that regulation is driven at government level, and there's going to be ways that regulation is driven at protocol level. So at protocol level, we're seeing a lot more the growth in what we call DAOs, right? Which are like decentralized autonomous organizations. So with these DAOs, I guess you can liken a DAO to almost like a board, but it's not restricted just to a board. It's the general community that manages and governs a protocol, right? So that's a level of self-regulation that we're seeing anyway, right? As crypto widely grown and valuations are getting wildly increasing, the introduction of DAOs actually creates a level of self-regulation. Now, at government level, I think that with any technology, you don't want to be heavy-handed. Now, technology, with innovation and technology, if you're too heavy-handed, you actually lose out on a lot of potential value. We've seen a lot of technologies develop outside of regulation. If you overly regulate, you then remove you remove an edge from innovation. So I think having light touch regulation, creating things like sandboxes where crypto companies can set up and test out the thesis, and test out the narrative, test out the protocols, is great. We're seeing actual protocols like Polkadot and Kusama, who are actually now they're I guess you wouldn't call them like an Ethereum killer, but Polkadot is almost like a smart contract based, or it's a layer one protocol like Ethereum is. But what Polkadot has now done is Polkadot have now developed a sister protocol called Kusama, right? So within Kusama, they now allow crypto projects to test out their own individual protocols within a real world environment, but it's a test environment. It's a bit hard to explain, but Kusama is now like a real world test environment for the Polkadot network. So if you do well in the Kusama environment, which is a test environment, you then move over to a more regulated environment called the Polkadot protocol, right? And I'm very bullish on Polkadot and Kusama as protocols within and of themselves. So, I think governments are still trying to catch up, to be quite honest. And we're going to see what regulation happens. Recently, before Donald Trump left office, they were trying to think Steve Mnuchin, I think the former Treasury Secretary, was trying to introduce regulation where you had to literally KYC your personal wallet, like your Bitcoin wallet or your Ethereum wallet, right? And I think that you had to almost do KYC on each transaction. I mean, that was just crazy because then you slow down the pace of innovation. You move back to that environment where you're working within that SWIFT or SEPA network where it takes 3 days to transact money. All I'm doing, if I'm moving money from Nigeria to the UK, it shouldn't take me 3 days to 7 days to do that in 2021, in the age of the internet, right? And these old networks were the kings of that. They created these bottlenecks that slowed down commerce. Right now, if you overly regulate the crypto space, crypto has slowed all that down. I can actually transact value between Nigeria and China in 2 minutes, as long as it settles on the Bitcoin block on the blockchain network, right? My client will see value. I haven't needed to use SWIFT. My transaction costs have been cut down. Transaction time has been cut down. We don't want to lose that innovation. We don't want government regulation to lose that.
To kill it, right? Yes.
So regulation, it's still developing. It's still developing, in all honesty. We're not sure which way it's going, but we are seeing a softening of the stance. When I first started investing in cryptocurrencies, the word was no. Our citizens, no one should buy crypto. It's dangerous. It's this, it's that. Run away from it. But now I think governments are realizing that,
Michael, you have put your head, your hands, your feet, and everything there. Everything. I know.
Yeah. And now we're seeing, and it's paying off, because now that we're seeing a softening of government policy towards cryptocurrencies. I mean, look, the Visa network just integrated USDC. USDC is a US dollar stable coin on the Ethereum network. So basically, as long as I have a Visa card, I can use crypto and pay in a shop. Literally, that was introduced by Visa yesterday. So the speed of innovation is amazing. I know yesterday, I had to sell Bitcoin.
The jury is still out there on that, right?
Sorry?
I said the jury is still out there on that stable currency introduction, and whether benchmarking it to dollars is right idea or way to go.
I mean, you need stable coins. If you're in the crypto space, you need stable coins, because yes, there is level of volatility within a lot of cryptocurrencies. So stable coins introduces real world stability. So USDC, so there's two key stable coins back, the US dollar base. USDT, which is US dollar tether. Yes, there are a lot of issues and concern about USDT. I mean, they recently had a court case with New York State, district attorney. I believe they settled, because one of the issues was, were they operating a fractional reserve? Now in crypto, you're not supposed to operate like a bank. You're not supposed to operate a fractional reserve. If you say you have $1 million USDT, you're supposed to have that backed by actual US dollars, right? Yeah. So USDC is actually regulated and approved by the Securities and Exchange Commission in the USA. And the USDC as an Ethereum stablecoin is actually growing in adoption, is growing in awareness. The only issue with USDC is that the US government does have ways to freeze your USDC, whereas with something like USDT, they don't have that control. I think USDT is much more decentralized than USDC. But stablecoins are an important part of the crypto ecosystem.
Of the whole framework. Yes. 100%. So we are almost completely out of time. I need to ask you my final question so that we can wrap up the session. It's been such an interesting, conversation with you, Michael. So let me ask this quickly, right? Do you see cryptocurrencies as commodity or currency, as one who's heavily invested in that market? I mean, which one serves your better interest, looking at it as commodity or currency? And how, would this change depending on the circumstance?
if I'm being honest with you, like, yeah, there's a lot of questions around this. And, Bitcoin does have a little bit of an identity crisis, to be very honest. The initial, when Bitcoin was originally conceived, right, it was conceived as a form of payment.
Yes.
That's the truth of the matter. It was conceived by Satoshi Nakamoto as a form of payment. Now, Bitcoin and blockchain technology in general has developed over the last 10 years, right? And now I guess it's gone through that stage. It's at the stage now where it's seen more as a store of value than as, an actual payment mechanism. Now, yes, you can, it's difficult to say, if you're looking at a commodity, I mean, like gold or copper, it's not so easy to buy, sell, and price goods using gold and copper, but you can actually buy, sell, and price goods using Bitcoin, right? So there are some currency elements within it. But I mean, from a regulator's perspective, the U.S. Securities and Exchange Commission have, for all intents and purposes, classified Bitcoin as more of a commodity, even though they know that it has these differing, sides to it. And I think that, like I said, for me, I don't spend my Bitcoin. I just don't. I save it, and I continue to save Bitcoin. So it's called stacking sats. So I continue to stack sats. There's an old story of a guy who bought he bought 2 pizzas, and he spent 10,000 Bitcoin on those pizzas. This was like 10 years ago, in the early days of Bitcoin. Now that's seen as madness. How would you spend 10,000 Bitcoin on 2 pizzas? I mean, those would be the most expensive pizzas on the face of this
planet. Absolutely.
Right? There's a more modern take on this where Elon Musk has now started to accept Bitcoin as a form of payment to buy a Tesla, right? And it makes sense that today, a Bitcoin may be $58,500. So maybe with 1 Bitcoin, you can buy a Tesla. But in 10 years, if Bitcoin reaches $1 million per Bitcoin, you have to bear
he's gonna
be the one benefiting on the upside. I bought a Tesla for $1 million, right? So I do look at it more as a store of value and as a savings tool.
Michael, please let me ask you my final question, because we really, really, really need to put a plug on this right now. So do you think, I mean, some people feel that there is no way to explain the underlying fundamentals that influence the value of cryptocurrencies. So we just know that it's a game of scarcity. I mean, it's a game of supply and demand, and that's not really how currencies work, right? So for instance, let's use Bitcoin. Would you say that Bitcoins are on a steroid? Are we expecting the bubble to burst soon, or are we really inching for that to go to maybe $100,000 before the end of the year? I mean, what are you saying? What are you thinking?
Easy. I think yeah, Bitcoin is easily $100,000 this year, easily. So I don't think it's a bubble. I think for me, fiat currencies are a bubble. What gives the government any right to just print paper into oblivion, right? The US government, the Nigerian government, they're busy just printing and printing and printing, right? That's a bubble. At some point there must be a correction, right? It's just, and we're just trusting the government that the value of this fiat currency today is the value of this fiat currency tomorrow. But we've learned better. And so essentially, Bitcoin everything enters a bubble. There's been real estate bubbles, tech bubbles, stock bubbles. It doesn't take away from the value of these sectors, right? And essentially, anyway, Bitcoin is undervalued. It's massively undervalued, even at $58,000 or I think it's $59,000, almost $60,000 today. So for me, if Bitcoin for me is gold, right, gold 2.0, right, then we have to look at the market capitalization of gold. Bitcoin it's faster than I can't take gold into a Mr. Biggs or into a shop and give them a piece of gold and get something from it back. But I can potentially transact in Bitcoin in this day and age, right? Gold is heavy. I can't carry gold everywhere. Bitcoin lives on my phone or on my laptop.
We really need to wrap up the conversation now. We are completely out of time, but it's been such an interesting time. I'm sure that our listeners have learned so much listening to you. I'm sure that a lot of questions have been answered. We are really, really grateful that you could make the time to be with us today. Thank you so very much. Thank you, and have a very good afternoon. And thank you all for listening to this episode of Simply by Deal HQ. Deal HQ is an Africa-focused transaction advisory firm out of Lagos, Nigeria. To know more about our services, please visit our website at www.dealhqpartners.com or follow us on our social media pages on Twitter, Instagram, Facebook, and LinkedIn.
Thank you for listening. This podcast is brought to you by Deal HQ Partners. To find out more about our services, visit www.dealhqpartners.com. See you on the next episode.